Welcome to another S&P 500 analysis. Today is September 30th, 2022. This week, the S&P 500 finally put in a new corrective low. It took out the June low and closed with a lower low. Will the S&P 500 go lower? How low will it go? In this S&P 500 analysis, we'll review the market sentiment, market internals, the price action of the S&P 500, and the other major market indexes and see what is the market telling us. Stay tuned. If you missed my update video in the middle of the week, then subscribe and click on the notification icon. That way you will be notified when I have posted a new video. Now let's dive in. Another down week for the S&P 500, 3 consecutive down weeks. This week, the S&P 500 lost almost 108 points or 2.91%. It closed at 3585.62, below the June low of 3636.87. The price action is back in a lower low, lower high pattern, a characteristic of a downtrend. The close is below the declining 10 and 40-week moving average, and it is on a one-time framing down. These are all bearish signs. We'll look at the price action in more detail after we first review the sentiment and the market internals. The VIX finally moved and stayed above the 30 level, and it closed Friday at 31.62. The put-call ratio also continued to be above 1, indicating more puts are being purchased than calls. Although the S&P 500 was down more than 1.5% on Friday, the up-down volume ratio was sitting at 1.5 to 1 in favor of a down volume. One would expect to be worse with a 1.5% down day. And the daily advanced decline showed only 433 more declining issue than advancing issue, so it is not a broad market-based sell-off. And the number of stocks make new 52-week low is up at 488, but that is still much lower than the last few days where the S&P 500 performed a little bit better than Friday's performance. And the New York Stock Exchange cumulative advanced decline line is moving lower along with the S&P 500 closing lower, so there is no divergence. The Nasdaq 100 lost 193 points or 1.73% on Friday, and lost a total of 340 points or 3% for the week. And notice it is getting closer to hitting this 100% major move of this bear flag. The up-down volume ratio was 2.4 to 1 in favor of the down volume, and the daily advanced decline showed there were 774 more declining issue than advancing issue on Friday. The number of stocks make new 52-week low came up this week. It has 553 stocks make 52-week low on Friday. The Nasdaq 100 finally closed below its June closing low as alerted by the negative divergence from the AD line. As of Friday, the Nasdaq cumulative AD line put in a lower low, along with the Nasdaq 100 closed with a lower closing low. So there is no divergence between the AD line and the Nasdaq 100 at this time. So from the sentiment and the market internal, we see the market participants are getting fearful now and are buying more puts than calls. Although the price action seems to be more negative than recent past, but the internals are not indicating a sign of panic selling. The up-down volume ratio is not showing a panic exit from the market participant, and the daily advanced decline was only modestly in favor of the declining stock on Friday, and it is not showing a broad market sell-off. Now let's go and take a look at the interest rate, US dollar, oil, gold, and silver, and see what are those markets telling us. We see the 10-year yield hit a high of 3.992% this week and close out the week at 3.804. The next upside level could be in the range of 4.324% range. The US dollar hit a high of 114.778 this week and closed the week at 112.173. We're still monitoring for a more upside move, possibly into the 117 range. And the oil bounced between 76 and 83 during the week and closed nearly unchanged from last week at 79.74. Silver pulled back to the 18 level again before it bounces back up. It is just chopping around inside of this high volume zone between 20 and 17. And gold dipped below this 1625 level before it bounces back into this high volume zone Now we continue to look for gold to chop around between 1700 and 1650. Now let's take a look at the indexes, starting with the S&P 500. As you can see on this daily chart of the S&P 500, we see the price close between this expected move, this weekly expected move, and we haven't seen it for many weeks. Now next week, the upper range is between 3,730 and 3,703.60. And then the lower range is between 3,467 and 3,440. We could see a bounce next week. If we do, look for a move to come back up to this 3,700 level and possibly move into this upper range and fill the gap up here somewhere around 3,750. And the downside move could be pushing it back down to this 50% retracement level near 3,505, then possibly get into this lower range, which is between the 3,467 and 3,440. And if the lower range doesn't hold, then look for this pre-pandemic high near 3,393.52. And the Nasdaq 100 closed below the June's low and in between the 50% and 618% retracement level. On the upside for the coming week, look for a move to come back up to this 11,500 and possibly come in and fill this gap near 11,600. And on the downside, look for a move back down toward this 618 retracement level near the 10,600. The Russell 2000 held up pretty well for the week. It only lost 15 points, less than 1%. And it is basing between the 1650 and 1700 level. Now for next week, look for a possible move back up to this 50% retracement level near 1712. And for the downside, look for it to move back down to this 1650 area. And if it breaks below this level, then look for a move back toward the 618 retracement level near 1536. The Dow Jones Transportation closed down for the week, but it did not make a lower low. So look for it to make another attempt to try to come back up to this 50% retracement level near 12,350. On the downside, look for a move to put in a lower low below 11,950 and watch for a pre-pandemic high at 11,359.49. The Dow Jones Industrial finally entered the bear market territory this week. As of Friday, it closed down 22.3% from its all-time high. It closed with a lower low and below the pre-pandemic high. So for next week, look for a bounce to backtest the pre-pandemic high near the 29,568.57 level. And for the downside, look for a move toward the 50% retracement down near the 27,580. The New York Stock Exchange Composite Index also closed with a lower low and remained below the pre-pandemic high. For next week, look for a bounce back up toward this 14,000 level near the 382 retracement. Now for the downside, look for a potential gap fill here near the 13,270 and near the 50% retracement level around 13,000. In summary, the market is showing more downside momentum, but the sentiment and the market internals are telling us that a bounce could be in the offing for next week. This could be another dead cat bounce. The bottom of this downtrend has not been made yet. At least the market has not informed us of such. Remember last week I put out a video telling you that the Globex low from the E-mini S&P 500 future was telling us to look for a lower low. And in the last 10 minutes of the regular trading hour session on Friday, we saw a quick flush down to the Globex low and put in a new low. I even made these tweaks thinking that it might be putting off next week, but the machine had another idea. So watch on Sunday and see what the Globex market will do. Will it put in a lower low? If so, then be on the lookout for a new low for the market when it resumes trading next week. I will put out a video this Sunday on the SPY, QQQ, IWM, Apple, and Tesla. And during the week, look for a possible update video or a Substack post from me. And be sure to smash the thumbs up to help promote this video on YouTube. Thank you for watching and stay safe.